Good day, Money Masters and Treasure Hunters. Welcome to the April 18th terrific Thursday edition of the Closing Bell on the Tom O'Brien Show. I'm your guest host, Steve Rhodes, filling in for Tom for the evening while he is out of town. And if you're not familiar with me, folks, I kick things off for TFNN each day at 9 a.m. with my opening bell call on the Trader's Edge Show, followed up by the Money Masters from 10 to 11. Also, I'm author of Mastering Probability, a newsletter service for investing and trading, sent out by about 8 a.m. each day, covering the equity, the futures, Forex, commodity, worldwide markets. This show, folks, it's all about you, and I absolutely treasure your presence here today, and my outcome, as always, is to help you to become a better money master and to provide you with the tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, that is what it's all about. So let's go take a look at one of our tools. This is the tool I call Make Yourself Necessary to the World, and Mankind Will Give You Bread. Ralph Waldo Emerson, in many of his masterful essays, pondered this specific formula. Emerson was expected to follow in the footsteps of his father and his grandfather as a Unitarian minister. However, he had recognized that his gift was different. Emerson had the fire in his belly to write, and so he did, and soon after, folks, he found success. You know that. Emerson's work can be found in bookstores, libraries, gift shops, and many places all around the world. He was true to his formula, make yourself necessary to the world, and mankind will give you bread. Folks, if you can write a better book or build a better mousetrap, the world will make a beaten path to your door. The Bears were beating down the doors of the markets today. We had the Dow finish off 81 points, closing out at 14,537. S&P down about 10.4 points, trading out at 1541. Uh-oh, that spells trouble in the marketplace. We'll take a look at that. You had the composite off 38 points, down 1 2/10%. Traded out or closed out at 31.66. Russell 2000 off about 0.6%, down 520. It is earnings central around here for sure. Google out with earnings, IBM out with earnings, Chipotle out with earnings. We'll take a look at all of those here in just a few minutes. But let's first start off by taking a look at the S&P 500. As far as volume today, let me take a quick peek here, see what the New York Stock Exchange finally turned in the session at here. It looks like we've got volume here on the New York Stock Exchange right around 797 million. Actually, not too bad. So a lot picked up here during the last 15 minutes of trading. Yesterday, you were down with 854 million. Today, looks like down with about, we're going to call it 800 million as well. We know we were down with 975 million on Monday, up with 743. So it's down on volume. If you follow the volume, volume is to the downside. Now let's go take a look at the S&P 500, closing out at 1541.62. The S&P is chiseling away at the last area of support before we see a real break, and that break would be down to the February 25th area, February 25th, February 26th, right around 1485. It's trying to chisel out the hammer low. That hammer low was tested today. That was April the 5th. The low out there, 1539.50. We actually intraday saw a low on the S&P of 1536.03, closed above that hammer, was a test of the hammer. That's where the bulls are. That's their last bastion right now of hope. But more importantly, really is the close today. You now have a rejection of the entire swing point from October 11, 2007 out there, where they close below 1546.72. Watch the markets tomorrow. A close below 1546.72, that'll be a rejection of that swing point high, that all-important swing point high on the daily and on the weekly, and we certainly do have volume off of the top. That is a big signal out there. That is on the S&P 500. Let's take a quick spin over and take a look at the SPYs here, take a look at the correlation there. The SPYs, the swing point, the bottom of the swing point of October 11, 2007, that's at a price point of 154.54. SPYs closing out today at 154.14. Underneath that area, there's no hammer on the SPYs out here. The SPYs just simply going against the swing point from April 5th that had 159 million shares. Today, moving down with 159 million shares. So it's not a test on lighter volume. That spells trouble to come here. Yesterday, the SPYs moved down with 226. So you do have volume lightening up a bit. If we do take a look at the SPYs, you see the SPYs here now closing outside of that rising price channel that would take you all the way back into the from November the 6th out there. That also is not a good sign. So you see on the SPYs, you see on the S&P 500, and if we go over to the SPYs as well and take a look at the weekly chart out here, the weekly chart shows you've got right now, if the market were closed today, you would have a bear sash candle. You still have a bear sash candle tomorrow as long as there is actually a close below 155.27. Why is that important? Well, you have not seen a bearish candle. You have not seen a bearish reversal candle, quite frankly. You certainly haven't seen one since the January 4th time frame. That is a long time to go without any kind of real bearish candle out there. This one is a bear sash. I categorize candles, at least what I'll call two candlestick reversal patterns. That's what you're taking a look at when you're comparing last week. In this case, we're on a weekly chart versus this week out here. And I have 5 different classifications from 1 to 5, with 5 being the strongest from a bearish standpoint. Well, only a bear sash, that's a class 4 category out there. So put on your seatbelts. Watch tomorrow's close. 154.54 is the number. You close back inside there on the weekly chart and says, okay, you can go ahead and try to make one more run for the top out there. Markets, when you have volume off the high, oftentimes they give you other opportunities to get out. And that's all. That's really the best that I can see out here. We can see we've got volume inside the SPYs on the weekly chart as well, and we don't even have tomorrow's trading inside. Let's go take a look at the other indexes out here, then we'll switch over and take a look at some of these stocks here in the market, see what they're actually trading into. Let's go take a look at the Dow here. Let's go take a look at the big boy as soon as I can find it here on my screen. Here we go, bottom right-hand corner. The Dow closing out at 14,537. The Dow getting now down into below the swing point there from March the 15th out there. March 15th really set up an area of resistance. Once you got up over that, that was an area of support. That price point was 14,539.14. You close at 14,537.14. So just slightly below it, but not with a ton of conviction. If we take a look at the Dow, the normal retracement on the Dow would take you to just really a dead cat bounce out here, 13,964. I suspect that really what the Dow wants to do is get down to about 13,394. That's sweet 618. That's the 618 retracement, as well as pretty close to the top of the January 2nd, 2013 candle. We know we've got a major bearish reversal candle signal. It's a set of 4 candles. It's April the 10th, April 11th, April the 12th, and then April the 15th. That is a major evening star reversal pattern. It is the opposite of exactly what we saw down at the bottom of November 16th. That's just to put things into perspective out there. Now, let's go take a look at the stocks here moving in the market. Big stocks out with earnings. Let's start off by taking a look at Chipotle. Let me switch over to one other spot here. If we take a look at Chipotle, there we go. Chipotle out with revenues, out with earnings here. They close at 328. Last trade here fired off at 353. So it's up a good, we'll call it about $25. Let's see, what do they have? They did earnings per share of $2.45 versus $1.97. That's actually all that I see here on my screen. Let's go actually take a look at what it's trading into. So I said 352. Let's go take a look at the last swing point out here. The last swing point is going to take you to September 17th. That high is 351.80. So when we come in tomorrow, we're going to see Chipotle try and get up over that swing point. Now, volume on that swing point, pretty tepid. Only 1.1 million shares out there. Today, in trading, you had Chipotle down with 894,000 shares. But what we can take a look at, if we take a look at that candle from September 17th, that swing point, 1.1 million shares. I remember I had somebody calling in and asking if it would be okay to short this. And what we took a look at was the mere fact that what Chipotle was doing was moving up into that candle, into that swing point with volume. It did it on the day of April 11th. It had 1.4 million shares, that 1.4 going into 1.1, and just said, it's pushing. They're pushing into that with volume. They're going to be pushing into that with volume as well tomorrow. If it can get a close above 351.80, what Chipotle will likely do is try to get up to the area that really should be resistance on this. It's quite a ways up. That's at the July 19, 2012 candle. That's where it fell off the planet here. That's where it had a, Chipotle used to be owned by McDonald's, I believe, and they didn't have a very good Happy Meal. Anyways, where Chipotle, if it can get above that swing point, should try to make a run for $396.98. Right now, last trade firing off at $352.44. 877-927-6648. We'll be right back.